Now, obviously, everybody has expressed their cares and concerns about the coronavirus. So when we say there that FASB says it shares the global concerns and will monitor and respond, that may sound like, just a standard PR statement. But Bill, it really isn't. FASB has taken, for them, remarkably quick steps. Typically, they move at glacial speed.
That's true.
This time?
Well, they did have some incentive from Congress, but they are really making some accommodations because of the difficulties of the virus.
And they've been especially understanding for the needs of smaller and private companies, as we shall see in a moment. So this notion that is a concern, there really are. And that's why things in some ways have changed. Bill.
So you can see quite a little chart here of standard setters. And, it all starts in the U.S., down in the lower left corners with the SEC after the crash of 1929 and the creation of the Securities and Exchange Act and Securities Act of 33 and Securities Exchange Act of 34. The SEC was set up, but they said, we don't think we want to have government set standards. So for 40 years, they turned it over to the group in the upper right-hand corner, which was AICPA, until about 1973. And they said, a volunteer group, which AICPA was, isn't quite good enough. And then starting in 73, they turned it over to the FASB. And they've been setting standards now for about 40 some years. Early on, they were putting out enormous numbers of standards on trivial issues, small issues that came up. So they created what you see down in the bottom left of the screen, the Emerging Issues Task Force, to handle a lot of issues that they are, as it says in the title, they were emerging. And that way the board could bless those things, and then they could also deal with big issues like revenue, like leases, like pensions. Their standards were in paper form until about a decade ago, and then, like so many other things, they were codified, and so you see the codification there. Yes, Ray.
Now, by the way, as we go through this presentation, you will hear past and present. Ray here tends to be one who still talks about the FASBs by numbers. FAS 5, which is contingencies, 144, which is impairment. Bill tends to be a little more correct because he's teaching this on a daily basis to students. He's an ASC person. I'm sure if anyone here was to yell out to Bill, 379, he would chime in immediately. There isn't a 379, Bill, it's empty.
I'm good. I'm going crazy trying to come up with it.
I knew he would. But the point is, you can focus on them by ASCs, which is how you quote them. But for many of us, we'll also provide the transition to what was familiar and what was legacy.
So FASB 5 is now ASU 450.
I figured you'd know that, Bill.
Yeah, well, it comes up a lot. So somewhere along the line, the Financial Accounting Foundation, which is the parent organization to the FASB, said we need something to deal with government accounting for local and municipal governments and state governments. And so the GASB was created to be a sister organization. We used to have various levels of GAAP up until the codification came in. Today, if it's in the codification, it's GAAP. If it's not. So AICPA, even after it stopped setting standards, became a low level of GAAP. But now, Ray, it's something else, isn't it?
Okay. Now, one other point before we move to AICPA, Bill. The one thing that we now do not need to talk about is the International Accounting Standards Board, because we all know we're never going to converge, and since we never converge, you can take all those books you've got of international standards and you can burn them. Actually, is that true anymore, Bill?
Well, not this year. And that's what's funny, because what Ray said is correct. Except this year, we created this thing called PPP loan. There's forgivable loans. And we have nothing in GAAP to deal with it. Nothing specific. But the international standards do. And we'll talk about this in much more depth later on. You may, in fact, want to refer to IAS 20, one of the international standards, if you're dealing with forgivable loans.